Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden secrets of the corporate world. And today we're diving into VenHub Global Incorporated's recent filings to see if they're building a solid foundation or just floating on air. Before we dive in, if you like breaking down complex financial documents into simple plain English, remember to hit that subscribe button and ring the bell. We also have a fantastic community over on Discord in the description below, so come join the conversation. Today we're looking at VenHub Global Incorporated, a company that seems to be making moves in the market. This report is a lot about something called a private placement offering, which is basically a way for companies to raise money by selling stocks and warrants to big investors without having to go through the usual public sale process. So VenHub announced on the 10th of February 2026 that they entered into a deal to sell a bunch of their common stock to an institutional investor. They are selling a whopping 77,000,000 shares of their common stock. Think of these as small pieces of ownership in the company. Along with those shares, they are also selling what are called warrants. Now, warrants are like tickets that give the holder the right to buy more shares of the company's stock in the future at a set price. In this case, they are selling warrants for another 77,000,000 shares. This means that if all these warrants are used, VenHub could potentially end up selling even more stock down the road. All of this selling of stock and warrants is bringing in a substantial amount of money for VenHub. They are getting a total of $1,886,500 from this deal. That is a significant chunk of change, which can be used for all sorts of things like investing in new projects, paying off debt, or just keeping the lights on. Now back to those warrants, the investors have the right to buy those extra shares at a price of $2.45 per share. This is important because it sets a floor for how much that future stock will cost them to acquire. This particular deal actually closed very quickly, just a couple of days after it was announced on the 12th of February 2026. This suggests that the investors were ready and willing to put their money in, and that all the necessary conditions for the sale were met. These warrants also have a lifespan. They will expire on the 12th of February 2031 if they are not used by then. That gives investors a good 5 years to decide if they want to exercise their right to buy more stock. It is not just the main institutional investor getting warrants. VenHub also issued what they call an agent's warrant to AGP Alliance Global Partners, who acted as the placement agent. Essentially, the company that helped make this deal happen is also getting a piece of the pie in the form of warrants to buy up to 385,000 shares of common stock. The exercise price for these agent warrants is slightly higher at $2.69.5 per share. This is standard practice as a fee for their services. Crucially, the shares and warrants sold in this offering were not registered with the Securities and Exchange Commission under what is called the Securities Act of 1933. They were sold using an exemption that allows companies to sell securities to a limited number of sophisticated investors without the full registration process. This is typical for private placements, but it means these securities don't have the same public protections as those sold in a registered offering. Something else important is that the company's own directors and executives also signed what is called a lock-up agreement. This means for a period of 45 days after a registration statement is effective, they cannot sell any of their company stock. This is to prevent them from flooding the market with their own shares, right after a new offering potentially driving the price down. To keep everyone informed, VenHub also put out a press release on the 11th of February 2026 announcing this private placement offering. It is good to see them being transparent about these significant financial maneuvers with the public. This press release is included as an exhibit to the filing and essentially confirms the details of the private placement we've just discussed. It is their way of officially communicating the news. And finally, as is standard practice for these filings, they've included an interactive data file. This allows computers to easily read and process the financial information, which is handy for all sorts of financial analysis tools. So VenHub Global Incorporated has successfully raised a considerable amount of money through a private placement. They've sold a good chunk of their stock and warrants and secured significant funding. The fact that they did this quickly with an institutional investor and have their own leadership team locked up suggests a level of confidence in the deal. However, it is important to remember that these were unregistered securities sold under an exemption. While this is common for private placements, it does mean a different regulatory framework is in play. The company's next steps in how they use this capital and how they manage the subsequent registration of shares from the warrants will be key to watch. Now, looking at the broader picture, VenHub seems to be actively seeking ways to fund its operations and growth. They are bringing in substantial cash, which is a positive sign for any company. However, the reliance on private placements and the issuance of warrants can also signal a need for quick capital or perhaps a strategy to leverage future stock sales. The key risk here, and it is a substantial one, is that the future value of these warrants and the success of the company are heavily tied to its stock price performance. If the stock price doesn't perform well, the warrants might not be exercised, significantly impacting the company's potential future cash flow from these instruments. Also, the lockup agreements for insiders are temporary and will eventually expire, giving them the freedom to sell, which could put pressure on the stock price. Overall, VenHub Global Incorporated appears to be in a phase of active capital raising and strategic financial maneuvering. The substantial funds raised are a clear positive, and the quick execution of the deal is encouraging. But investors should remain aware of the implications of unregistered securities and the potential impact of warrant exercises on future share dilution. It's a bold move, and the success will ultimately depend on the company's ability to execute its business plan and deliver value. Alright, that is our breakdown of VenHub Global Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.